Yes, so hello everyone. Hello everyone. So I know you've seen the title. I know you've seen the title, How to Trade Like the Banks. Yes, I know. Or you're like, who is this guy again? Like, everybody wants to act like they trade like the banks. Now, you must understand that trading like the banks is trading with the top-down analysis. That is all that there is. Trading with like the banks is trading with the what top-down analysis. Now, what is the top-down analysis right here? That is all I'm going to be doing. On this video, that's all we're going to be talking about, the top-down analysis, how to make a proper top-down analysis, how to use the past to predict the future. That is all that there is. How to use the past to predict the future. Now, the top-down analysis is basically going from the higher time frame to the lower time frames. And that is how the banks do it. The banks, they go from the higher time frames to the lower time frames. The banks, they do not trade the 15 minutes. The banks, they do not trade the 10 minutes, the 1 minute. No, the banks, they trade the monthly, the weekly, the daily. They trade the 2 months, they trade the 1 year charts, all of that. But because we are retail traders and not hedge funds, we're going to be trading with the monthly time frame, daily, and the weekly time frame. Now, we do not execute the market on the monthly, daily, or the weekly. No, we execute on the 1 hour and on the four hour. Now, to be able to have a proper trend, to be able to have a very, very good trade, to be able to have a trade that has no stop losses at all. When I mean no stop losses, I mean no losing trades, is to find a trending market. The trend is your friend. Yes, it is not it is not, it does not get old. The trend is your friend. You need to follow the trend. You need to go where the market is going. You need to go where the majority is going. Now, the monthly time frame here is the first time frame for the top analysis. You start on the monthly time frame. Now you can see this is a new chart. This is Euro USD. There's nothing on here. You can see this is clear as day. This is not a playback. This is a normal chart. This is the monthly time frame. There is nothing here. There is no indicator, no RSI, no MACDs, no nothing. This is a normal chart. Now, all we have to know is this: how do we find a trending market? Now, you need to understand market structure. You need to understand market structure. In another video, I'll make a video on how to get how to know and understand market structure. But on this video right here, what we are going to be studying how to how to make a proper top-down analysis. So, excuse me, how to make a proper top-down analysis. So let's go from the monthly time frame. Let's go from the monthly time frame. On the monthly time frame, you can see we're bearish. It is easy. Why is it easy? Because of structure. This was the last high. We've broken it. Now we're bearish. Now, you might ask yourself, well, how about this pullback? Yes, a pullback can have structure, but that does not mean it is bullish. A pullback, I repeat, a pullback can have structure, but that does not mean it is bullish. In this case, the monthly time frame is very, very bearish. This is just a pullback. This is a minor pullback. Just a minor pullback. This is a minor pullback, and you can see that it is still bearish. Why? We never broke structure. Euro USD never broke the last structure, so it is still bearish. Now, we do not even draw the lines on the monthly time frame. We just know the market direction. Now, the monthly time frame is the time frame we use in knowing the overall trend of the market. Overall trend of the market. Now we go to the weekly time frame to mark out our zones. The big guys to do this. You need zones. You need to know where to focus on. You can see this is a widespread chart. You need to know where to focus on. I understand, yes, we were bearish at first, and then we turn bullish, and then we turn bearish. Now, let me show you something. This is why you need to trade with the trend. Now we understand from the monthly time frame that your USD is bearish. Even if it was 2 years ago or 3 years ago, we were still bearish. Now, you can see every time the market lower low, lower high, lower low, lower high, we broke structure. Every time the market was going against the monthly, we're struggling. You can see we're struggling, right? We're struggling. And then the market broke structure. The weekly then became in confluence with the monthly and turned bearish. Then you can see this free fall we had here. Why? Because the monthly is bearish, and then we're going with the flow of the market. You can see every time we broke structure, every time we started to go up again against the monthly time frame, you can see we're struggling, and a lot of people here try to buy, sell. No, that is not how it is done. That is not what how it is done. On here, you can see immediately the market came right here, started to fall, gave a chart pattern right here, double top, fell easily. Why is the market falling easily? Because it is falling with the trend of the market. The weekly is going alongside the monthly because the entire trend of the market or direction of the market right now is bearish. Now, how do I mark out my zones? I do not need any tool. All you need is to look left. That's all you need to do. Just look left. In trading, you need to understand that to know the future, you have to look at the past. To know the future, I repeat, write this down. You have to look at the past. It doesn't matter how far you go. If I've had to go in a certain time, I've had to go to like 1970 something just to look at it, just to get a more direct structure of the market, a more direct zone to trade in between. Now listen, to be able to mark out your zones on the weekly time frame, you have to look for chart patterns. Chart patterns like double top, double bottom, head and shoulder, triple top, triple bottom, all of that. You know that already. If you're here, you know that already. Now, to be able to know that, you need you need to look at the market for what it is. So you need to look at the market structure. So on here, I can see a market structure. I can see a chart pattern, right? Double top, right there, boom, quick, as easy as that. Now, I cannot see nothing here. I do not see a double bottom. I do not see this. I do not see it here. This right here, I do not see it here. This right here, I do not see it here. What do? I go left. I look left. It is not here, so I keep going until I find it. That's all it is about. I keep going until I find it. Now let's keep going. Come on, load up. Now, thank you. So you see what I'm talking about. I see it here. I see it here. So I mark it out. Simple. I see it what here. I mark it out. Now, if you look, I haven't looked at the future, right? I just came and plotted my line, right? Now let's go to the future. Let's see. Boom. How easy is this? Can you not see my listen, people, you see how easy this is? You see how easy it is this easy. It is this easy. It is this easy. Break, retest, drop. The market is too bearish to look for buys. I do not listen. The market is too bearish to look for buys. Now we have our upper zone, mid-range zone. Now we need to know where this push is going to end. You see how we knew where this push was going to end right here, but we broke it, retested it. Now we're going somewhere else. Where are we going? Here. This is where we're going. This is. I can see like a minor double bottom, double top, double bottom around here, but this is where we're going. Take it from me. Euro USD is going to fall here. You heard this first here. Euro USD is going to fall all the way to 97,000. 0.97000. Euro USD is going to fall all the way to what? 0.97000. That's where Euro USD is going to fall all the way to. Now, we do not need this range right here. We do not need that anymore. All we needed to do was to get this level. Now, if you want to trade like the banks, we have this level. We have this level right here. We have this level. We have this level right here and this level. This is all you need. This is all you need. Now, once you've gotten these levels, we've gotten this level because we know that when the market gets here, it's going to look for a reversal, as it has done before in the past, right? As it has done before in the past. So now what do? I go to the daily time frame. Daily time frame is the time frame where we look for oscillations in the market. Obviously, we cannot trade on the weekly. We cannot trade on the monthly. So we have to go to the daily time frame to look for where prices might oscillate from, where prices might give us a clear break and retest from. Now let us keep going. Let's go to the daily time frame. Now, I will be making another video on how to plot these lines, but for now, this is just a clear top-down analysis for you to see how easy this is. It's too easy to not to not love forex. It is too easy to not understand market structure. It is just too easy. Now, if you remember what I said about the weekly time frame, I said we look for what? Market structure. Rather, chart patterns, double tops, double bottoms, shoulders, head and shoulders, triple top, triple bottoms. We look for these chart patterns. Why? Because these are firm prices in the market where the market touches twice or thrice and reversed. These are chart patterns in the market that we know that the market that causes reversal in the market. Every time the market, or rather, every time the market hits a price that has a chart pattern, the market is due to reverse. The market is what is due to have a reversal. You can see right here, just a little peak, just a little peak. Just look right here, just a little peak, just a little peak. So I'm not making this up. See, no, I'm not making this up. Let me make this bigger so you can see. You can see when the market, see this is the chart pattern, right? When the market came here, you can see reversal, reversal. When the market came here, reversal. Like I'm not making this up. It is there for us to see. You can see when the market came here, what did it do? Break, retest, reversal. When the market came here, what did it do? Break, retest, reversal. Like I'm not making this up. It's right there. It's just here for us to see. You can see it is all over the charts. You can see reversal, reversal, reversal. Come on now. Come on. It is right there. You see what I'm saying to you? It is what? It is right there. But that is not what we're focusing on. We're focusing on from this zone to this zone. So let's focus on this zone. So I'm just trying to give you an example. I just need you to open your eyes and see. Open your eyes and see. So double top, right? We plot that. We need that. This is the price. That's what we need now. I don't just plot my zones anywhere. I use rand psychological numbers to plot my zones. So in another video, expect the video to come soon. So subscribe and turn on post notifications. I'll show you how to use round psychologicals, the zero zero zeros, the numbers that like 0.2000, numbers like this. How the market actually, how the banks actually use these prices. The market doesn't just go to randomly to your support. The market doesn't care about your support. The market doesn't know if you have a support or not. It does not care. All the market cares about is the fact that it has to fulfill prices. It has to what? Fulfill prices. That's all the market cares about. Excuse me, I have to drink water because I'm parched. All the market cares about is what? It has to fulfill prices. So I'm saying it has to fulfill prices. So I look left. I cannot find chart patterns right here. So I cannot find chart patterns from this zone, right? I cannot find chart pattern. Now you might ask, why am I using this place? Why am I using this place? If you look at the future, we haven't looked at the future, right? I do not know what's there, right? But I do know that right now we are bearish. What I know is that we are coming here. Yes, this is where the market is going to come. So what I know is that the market is meant to be here. So what do? I go to the past to be able to predict the areas that I would look for entries from the daily time frame, or rather from the 4 hour for break and retest. But it has to come from the past. It has to come from this range that the market has used before. So moving forward, we have this line right here. We have the double top right here. I can see another double top right here. You have to train your eyes, folks. You have to train your eyes. You must train your eyes. You have to. That's the only way you would see and understand this market. You have to stay every day. Keep on doing it. Keep on doing it. Consistency breeds perfection. Keep on doing it. Keep on what doing it. Now you can see head and shoulder, right? So you can see how all I'm doing is looking for chart patterns. That's all I'm doing. I'm just looking for chart patterns. That's all I'm doing. I'm not looking for anything else. But my chart patterns, they have to be solidified by rand psychological. So I've plotted this before, so I'm just trying to make a video for you lot to see. But in another video, I'll show you how. Now, I have 3 areas where I could sell from. So in the future, all I'm going to be waiting for is a break and retest of this place to sell, break and retest of this place to sell, break and retest of this place to sell. Now, would I close my trades? Would I close the trades I have open here if I get here, or if I get here? No. What I do is, when I get here, I take 50% of my profit, and I let the rest run all the way here. You need to understand. We're not here to catch 100 pips. We're not here to make 50 pips. No, 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 no. Leave that for the little boys. We're here to make 1,000 pips and above. If you calculate from all the way from here to here, it's about 800 pips. We are here to make money off of these 800 pips. So when I get an entry here, I get an entry here, break retest, 50%, I take 50% out. When I get here, I let the restaurant 50% out. When I get here, I let the restaurant 50% out. When I get here, I let the restaurant. Now you will see that you might have three trades, 3 positions open right here. All of them are running at least a 20 to 1. Now I can show you how to make a 5 to 1 from here to here. I can show you how to make a 5 to 1 from here to here. I can show you that, but another video. All I'm gonna show you here is how to do a top-down analysis like the banks do it. So moving forward, before our time frame. Now, what I'm gonna do is now is I'm gonna go to the future. Now you can see we did not plot these lines off of the future, right? We plotted these lines off of the past. Voila. You see this? You see this, right? Now, if you remember, some people already you know complained about how the market might have manipulated them in this area right here. No, there's some of you, I know you took losses around here. Some of you took losses around here, expecting the market to come retest and keep. No, you can see the market has rejected a zone. We trade from zone to zone. The market moves from what zone to zone. The market oscillates from zone to zone. The market came into the zone, went back to the zone, came into the zone, broke, retested it, came into the zone, went back to the zone. What was he going to do again? We're very much likely going to break the zone, come into the zone, either come back here or keep falling. That's all that there is. Now you do not have to keep stressing. Okay, let me just place my resistance at the last low, a break and test. No, no, the zones are premeditated. They are marked out for you already from the past, from the past, so you can predict the future. Now, all we have to do is go to the lower time frame, the 4 hour or the 1 hour, for entries. You do not want to go below the 1 hour. You do not want to do that. You do not want to do that. So now, before this is going to be the end of the video, but I'm going to give you one tip. Now, the reason why most of us will lose our trades even when we come off of the right areas of interest is because we do not wait for the market structure to shift. We do not wait for it at all. At all, we do not wait. Impatience is the problem. Impatience is the problem. We do not wait for the market structure to shift. Imagine a trader waiting for a bearish engulfing from this place, right? Just imagine this 4 hour candle closes in 38 minutes and say we get a bearish engulfing closing here, right? We get a bearish engulfing closing here, but we are bullish. Why? Because lower low, lower high, lower low, lower high, lower low, higher high. Shift of structure. We are now bullish on the 4 hour. So what do I mean by we're bullish on the 4 hour? The entry time frame. Now write this down if you have to. The entry time frame, whatever your entry time frame is, it has to be in confluence with the overall trend of the market. If you are planning on selling on Euro USD, the entry time frame has to be bearish, not bullish. In this case, the entry time frame is bearish. That's what the entry time frame I mean is bullish in this case. The 4 hour time frame is bullish in this case. On the 1 hour time frame, you can see it is also bullish. It is what also bullish. It is also bullish. So we have to wait for the market structure to shift. It has to like shift. Let me show you. Let me give you a trick. This is how we do over here. This is the entry. We have to shift, break structure, come and retest this left. This space right here, giving us a head and shoulder, and then we'll place our sell limits above here, stop loss above here. But if say the market gives us structure coming down and break structure right here, then the stop loss is gonna be here, and you're gonna be able to catch a 5 to 1. Let me show you how it's done. Let me show you. There's a trade that I had taken. Let me show you. Now, this is how it's done. You can see this was a break and retest, right? On the 4 hour time frame, this was the first break and retest. Now, do not enter a break and retest that does not have structure. Do not enter a break and retest. Do not look for a bearish engulfing in a break and retest that does not have structure. You can see we had higher high, higher low in this structure, but we're still bearish, so that was good. But the shift of structure has to happen even though the market is still bearish. In this case, Euro USD was bearish on the entry time frame, that's on the 1 hour, but the pullback, the retest gave us oscillation. Now, there are some degenerates in here. There are people who are degenerates buying this, buying this, buying this. So there's volume in the market. There's volume in the market. If you would excuse me 1 second. There's volume in the market. So you have to look for make sure the entry time frame is in confluence with the overall structure. So this is the end of the video. Thank you very much. I hope you subscribe, turn on post notification. So see you.